Hello traders, welcome back to the channel. This is Aftab and right here I'm with another weekly forex forecast video for the upcoming week starting from Monday 28th of July 2025 and the week will end on Friday 1st of August 2025. So remember my friend, this week is going to be super beneficial for all types of traders. Why it is going to be super beneficial for all of you is because in the upcoming week this is not just a weekly forecast but we also have a monthly candle closing. So this week is going to be super important for the euro US dollar, similarly all of the pairs, because this week the monthly candle is going to close. First of all, let's have a look at the euro US dollar right here. And euro US dollar, if I show you the previous resistance and the support levels are right here in front of us. 1.17176, 1.16934 was the resistance, and 1.16040 and 1.15744 was a support. So last week, where was the market standing? The market was standing right here at 1.16148. The previous week my analysis was that if this market is on this particular bullish rally, this is obviously our support level right here, this is a resistance right here. So what it's going to do is it's going to take a bounce all the way from right here. And where was the target? The target for this particular trade during the week was around 103 pips at 1.1717. and let's have a look at it. We have got it on 21st of July 2025. So on 21st July, on same Monday, this thing happened right here. So congratulations everyone who made profits. Now further, last week what did I say? At this particular zone of 1.1717, what I will be looking for, I will be either looking for a sell setup to form so that I can aim for a sell opportunity. And I also further said that if I get a breakout, then we wait for a market to correct itself back to the breakout zone, and then we obviously can take it to the top side of the market. So let's see the market further. Right here we have got a break of structure. See right here, we don't have we didn't get a very fantastic sell structure. Otherwise this was also a very fantastic level to trade, but obviously market did not drop right here, so it couldn't be traded to the top side of the market once again. But remember, those sellers who took sell trading decisions right here, my friends, you did a complete mistake if you didn't put a stop loss for it. Because last week what I said that, and even in every video what do I tell you, is that always try to put your stop losses in place. First, this level was a very good sell area. Upon confirmation, we did not get confirmation, but those just like last week I said, this is going to be good for around like the intraday traders. So 38 pips it dropped, but I was not interested in this particular one. So right here, instead of this, what happened? This thing happened right here. We have got a break of structure right here. Now the market is keep retesting these levels right here on the H1. So right here on the H4, if we see, this plan will be even further clear to all of you, and you will even be more clearly understanding the setup. So if you want to know that how did I find these levels, you can check back my previous video. So what's next? Obviously we have got a break of structure right here. Now whenever we get a break of structure right here, you see on this one I was obviously bearish. Why? Because market was trading below 1.17. so below 1.17 we were sellers, we above 1.15 we were bulls, because this was a support towards 1.17 that acted very nicely, and we didn't get a very fantastic sell structure right here. The market gave a breakout. After a breakout, a retest and on the retest, what I usually tell you is that try to look for the recent resistance right here. So on a recent resistance 66 pips, but I was personally not interested in this trade. right? So in this particular video I'm going to further discuss it, that what the euro US dollar can give us since the start of the year, right? Here I'm all of you know I'm bullish, and why I'm bullish, because whenever I see an ABCD pattern I usually follow that direction, all of you know. So around 1.20 is going to be the completion zone, so keep this 1.20 in the mind, and let's have a look at this particular breakout right here. Weekly is so much congested. Let's have a look at the daily. On the daily right here, there was a let me show you again it on the H4 chart. Right here what was happening is there was a Fibonacci number of all of these traders as well, right here at a price zone of around 1.17. so market obviously gave a break of structure from right here, and after this particular break of structure, what now we can expect, most of the bulls are aiming for 1.20 approximately. And there is one evidence to that as well. What is that evidence? You know, this was a 61.8% retracement. Even last week I have discussed it. So what this market is going to do now is obviously going to approach this 1.20, but remember, this is not a trade signal or something. You just have to understand this particular setup, then you will be able to very nicely trade it and practice it obviously. Right here, as I said last week, this is going to be the impulsive wave. Now remember everyone, whenever there is an impulsive wave and when market is on this particular drop, and after this drop on a Fibonacci, it should drop further. So if it is not dropping and if it gave a break above this particular structure, it means that the bulls really want to complete this 1.20 a monthly structure. And this month we are also going to observe, maybe on Friday, a new candle of the August. So this week what is going to happen, obviously let's have a look at this structure. Let me zoom in the chart a little bit. Let me make it a little bit as this, so that my good audience can understand what I want to say. So first of all, on the H4 there is a very nice and clean range of around 61 pips for the upcoming week. But remember, those bulls who took buying decisions all the way from here, their stop losses are right here. And being a Fibonacci trader, obviously an ABCD pattern trader, this will be obviously on my radar list for a sell opportunity, but that is a bit way too far. Maybe this market can do this. See this big wick the market gave us, so it can do obviously that as well. But back to the H4, and right here let's have a look at it. On the H4, what is going to happen right here, obviously at 1.1717 we have got a very fantastic support right here, and from this support, now this is the resistance. 1.177 1.18 is going to be the resistance. If I adjust it a little bit, this previous week it go to 1.1788, and from right here this market should continue bullish towards 1.20. If it is not going to continue, I cannot force the market, but this is what the strategy tells me, so that's why I'm explaining right here. Now a little bit of the educational session, and that is, if I'm saying this is a very nice breakout and this is a retest of the market, these bulls are not crazy who took buying decision. They understand the market, so that's why they took buying decisions right here, and they are going to maybe close it at 1.1788, again 1.18 as well. They can close some of them, but the clever one, they definitely are targeting for 1.20 right here. This is the real truth of the market. Why I'm saying this, that see, this level was a very nice breakout to the top side of the market, and even market came back, took a retest of the market and continue bullish. So right here, obviously this continued, found some sort of resistance to the left side of the market, and the market dropped. So this is a very tricky for most of the traders, that whether the market is going to continue from right here or whether it is going to continue dropping further back to maybe this support or maybe this Fibonacci right here at 1.16520 approximately. If there is a news or a spike or something, then 1.1647 can become a very good and ideal Fibonacci trade in my opinion. Otherwise this market is going straight bullish. Below 1.17 obviously this market is bearish, and above 1.17, this market is going to be bullish. This is my opinion. Otherwise, if it breaks in, I think that will be change of the structure. So this structure, let's see what it gives us. Obviously, now I want to speak directly to those who are impatient, the kind of trader who opens the chart, sees a move and thinks, I missed it, I need to catch something now, or this is going to reverse, let me take a quick profit. But here's the truth, my friends. Quick profits lead to long-term confusion. Patient setups lead to long-term clarity. This week, don't chase, sit with your plan, let the market come to you. The breakout of 1.17 didn't happen to trap you, remember. Most of the traders then think, oh, this is a trap. It happened to filter out those who are not calm, right? If you are patient, the market pays you with interest. If you are impulsive, it charges you rent in the form of losses. So let's wrap up this my forecast for euro USD. Obviously I have shared that with you, and obviously I will look to buy around 1.1720, 1.1700 on a retest with a clean H4 setup. If I get it, I won't short blindly. Okay, structure still favor the bulls. This week is a test of emotional maturity, not just technical skill. So don't just copy this forecast. Okay, understand the behavior. That's how you grow into the trader who doesn't chase signals but builds their own logic. If this video helped you think clearly, leave a comment saying, this week I will trade with patience. Let's rebuild the right way, one clean forecast, clear mindset at a time. Take a lot of care of yourself. I will see you next time. Goodbye.